everyone. My name is Andrei, and I'm glad to see you all on this session on the Winter Data Meetup organized by DataZen and Comday communities. Today we meet Thuener Silva, a data scientist expert with over 15 years of experience, and he is going to show how AI is transforming inventory management. But before we jump into our session, I'd love to take a moment to ask you for your support in growing our communities and recognizing our speakers. If you're enjoying today's discussion and want to stay tuned on upcoming events, please hit like and subscribe buttons below. And your participation not only acknowledges our effort, but also helps us reach a wider audience, allowing more people to learn from these insightful discussions. Also, in the video description, you'll find the link to the talk and where you can share your feedback, award speaker badge, and rate the session. And we'd love to hear from you through the talk, so please do not hesitate to post your questions in the chat, and we will discuss all your questions during Q&A session at the end of the presentation. And sorry, Thuener, the floor is yours, so please start the presentation.
Hello, hi everyone. I came here today to talk about our story on how we deal with efficient inventory management using machine learning and optimization. This presentation will dive into that story and how we use machine learning and optimization techniques to revolutionize inventory management, moving beyond the limited traditional systems that rely on outdated methods. The objective here is to demonstrate how this technology can help you to achieve strategical enhance in your production and lead you to more efficient stock levels, reducing cost, and enhance the overall operational efficient management. Uh, the integrated approach not only addresses the inefficiencies of the past, but also sets new standard for the future and inventory management practice. So I invite you to join with us on this journey here. During this agenda, we will talk about what's decision optimization, right? So that's the background that I come from, how this inventory problems is described, right? So how we can understand this, understand how the constraints and objectives of this inventory problem, the modern approach to this inventory problem, right? So using inventory optimization and machine learning. I will demonstrate small application internal, right? So for precise activities, and I will talk about the use case and future next steps. And then we have some time for Q&A. Uh, that's that's the agenda for today session. So then let me introduce a little bit of myself, right? So that's where we start. So you can also understand how we think about that process, right? So I'm a lead data science here at EPAM, right? So I'm the head of the optimization offering, right? So I have a background in IT and data science with 17 years of experience in IT and 15 years of experience in data science. I work through several different projects, right? So in industry from CGP, oil and gas, energy, financial, pharma, and others. I have a PhD and master in optimization and machine learning, and I started my journey with machine learning models in 2007 with sentiment analysis. And here at EPAM, I'm specialized on impact and innovation. Um, and that's what's also my career. So I specialize on impact innovation and how to make sure that we can get all these new ideas and transform into meaningful impact for our clients. And I'm responsible here for the optimization practice at EPAM. So we start our journey here at decision optimization, right? So that's the background that I came from. So you need to understand a little bit what it's about, right? So before we dive into the inventory. So decision optimization, it's all about how you model your decision process, right? So it requires you to understand and put what sometimes is just on people's minds into a proper structured model, right? So with a goal functions and your constraints, that way you can model the best decisions given the assumptions that we have from the clients, right? So, and this will lead you to like a data-driven decision process, right? So, a lot of the case, right? So we are going to use like mathematical optimization here to construct this, but not only, but this will give you like a proper framework and structure to go and do your decision process, right? So, but it requires you to model this in a mathematical form, right? And that's my background, right? So, and it's one of the tools that we're going to use during this presentation. Uh, Decision optimization, it's like well known. It's like there is for years it has been used on several industries. We can see some of this, but here, for example, we have oil and gas, how you maximize oil production, healthcare, for trials, for example, telecom company for tower, where you should put your cell towers in order to provide the better signal for all your clients. You can think about transportations on how you do routing. Energy is a heavy one. They are heavy users of like decision optimization, mathematical optimization, right? So it goes from like your flow of energy all the way to your price of the energy, and how you do the generation. You can think about manufacturing, how you do like your production plan, you maximize your profit. Finance, even like quantitative funds and your asset allocation. You can think about this, seeing like market trends uh, and mitigate your risk exposure. Retail as well, for example, deciding how you distribute your budget for campaigns, right? So all this is like using like decision optimization. So in reality, around like 85% of like Fortune 500 use some kind of mathematical optimization, and it's spread all over. I can say one example, for example, for game scheduling on major like NFL and others, right? So they use mathematical optimization because it's a very complex problem to define the scheduling of the games. And they model as a mathematical process and they solve that way, and has been this for years. So, but if you think about like decision optimization, right? So how this is like positioned in like our data science projects, right? So not all data science projects are the same, and you have like a scale here to measure the types of the projects, right? So we start normally with like descriptive project, right? So that you tells what's happened before. So it's focused more on the past. It can be with like BI tools, dashboard, data mining, but you understand data and what happened before, right? Then you can go for like diagnostic, that you can understand better why that happened, right? So then it's a little bit entangled with like explanation. So you not only show the data, but you also try to explain, right? So what's happening there, right? So some case here, explainable AI, that you try to understand why some fluctuations, for example, on demand happened before, and why this fluctuation happened. And you can start thinking about the future, and then you become like predictive, right? So you predict the future scenarios, simulations, time series models, and then you start looking forward, right? But still you don't have decisions, right? So you have like demand predictions, you have fluctuations on the price that you can see for the future, but not necessarily like um decisions. Then the last step here will be like prescriptive, right? So prescriptive is where you do suggestion. You not only will look at the price, but for example, if we're doing with like campaign and budget campaign for marketing, right? So you suggest how you distribute the budget that you have, right? So you're going to use a lot of case like some forecasting on this process, but you don't only stop on that, but you also use this to make the like decisions. Right. So, and if you look at the bottom of this chart, right, so you see a lot of, you go from insights to all the way to decisions, and there is much more value as you get closer and closer to decisions. And this is also like help you to have more impact on your projects. So, but then what kind of benefits we can find for decision optimization model, right? So because of NDAs, we cannot like divulgate our numbers here at EPAM, right? So, and most of the projects you will not be able to see, but there is this very good book literature that has some estimation of savings. In the reality, as you get closer and closer to the decisions, right? So you'll be able to have much more impact, right? So and these numbers can reach like millions easily because of this closeness to the decision. One uh, good use case here that we have on this book, right? So is that we have exactly one case here of like inventory level, reduce inventory levels, and on this case, they calculate how much they can save with this is in around 200 million more revenue for the company. Okay, so now you have some background understanding on like what's decision optimization, right? So, and now I want to introduce like the problem that we have here, right? What is this inventory problem, right? And I would like to first start here on the right of those three main KPIs, right? So because those are the three main important KPIs for inventory. So we have three things, right? So you have your cash, that means your inventory, right? So and cash is not free, right? So if you invest on products on have inventory, you're not investing in other things, right? So if you have millions on your inventory that's like there waiting to be sold, you're not invest those millions on like better manufacturing process, on hire more people, on like getting new sites or getting new machines, right? So there's investment that could be used somewhere else. The ideal is to have like zero inventory, but that's most of the case it cannot be possible. There are some industry that can have this, but there are a lot of industries that deal with like demand fluctuations and want to have very high service level that we cannot have, afford to have zero inventory. Then you have the cost of your process, right? So how much it costs me to produce, to distribute this product, right? So to arrive this product all the way to my client, right? So there are several costs involved here, from holding costs, transportation costs, and so on, right? And the last one is like service, right? So service level means that I want to achieve my demand, right? So I want to be as close as possible to 100%, right? So on the service level to achieve fully my demand from the clients. And there is implications to going lower, right? So that you're going to lose that demand, but not only you can lose that demand, but you can also lose the client. Right? So those three are the main KPIs for this process. And on the left here, we have more details about it, right? So we have on the cost, it's not only like very simple cost calculations. We have the cash flow profit. You have to use interest rates. You have to consider like monthly sales, less all the other costs that you can have, considering both like fixed and variable cost. And there are like several costs that you have to consider. We have constraints on this model from physical limitations, capacity from the machines that you have, manpower. You can think about even like sick leave that you have, that some of the production lines could be not available for you. These include all the speed that you do it with the product. So we have to take considerations for your production, right? So that's going to lead to your inventory levels, all those constrictions of the manufacturing process, as well as the supply chain, right? So supplier constraints, and also how you can like distribute those products, lead time that you start to produce like a product and it will arrive on the shelf ready to be sold after a couple of weeks or even months, right? So all this has to be considered on this model. And you have like lost sales, that there is sometimes some simplifications that you just, oh, I will not able to sell this, but it's not only selling, but also if, for example, you lose like 10% of your demand, the client will not be happy, but he will still like ask for your products next month. But if you, for example, if it asks you like 1 million and you'll be able to deliver just like 10,000. So the client probably will look at another provider to give you the products that it wants, right? So then you have to consider also inventory levels, minimum and maximum inventory levels. The cost related with this, holding this inventory, is also to be considered. And the most important one, demand fluctuations, right? So that's what makes the need of inventory, right? So as your demand changes, I will need to have inventory to absorb these fluctuations that it could happen in the future, right? So, and should be considered on the decision process. So we have all this problem. You understand now what how challenging it is, and how companies are tackling this and how why companies having challenges on this process, right? So why the approach that they couldn't have doesn't work, right? So um, we have like an ability to consider demand fluctuations, right? So a lot of the case they have a process that will define the production and is not robust enough for these demand fluctuations. Model that we will have will not fit necessarily the company requirements. A lot of the case they will have like out of the box solutions that they will like integrate in and use it inside the company. But as it's one solution fits all, it's not adaptable enough for the company, right? So in each company has its own way of doing this process. It's what make them unique. But here, as you have to fit into like industry standard products, you have to just like give up most of the things that you normally have as that's custom for your company, and then it's difficult because the company want to do the its own way, but the tools that we have our in the market cannot do that. So then this will lead to like a lot of like uh, uh, firefighting, right? So that you think a lot on short term, and you're not like doing and looking at the strategical decisions, right? Leading to like excessive inventory. Uh, and a lot of the case, it's also because you don't have like capacity constraints on the solution that you're having, or doesn't have like scheduling considerations. The decisions are not dynamic at all. So you have like one decision that you're going to stay with it for the whole year. Could be your safety stock, could be your the decision that you have done on the beginning of the year, and you keep with the decision for whole entire year. And what's like the major cause of this, right? So at least from our like interpretation, what's the major cause of this? uh, we use a lot of classical equations for this, right? So one of the standard industry equation is the economic order quantity, and this is using all over and using several tools, right? So this economic order quantity is 1920s equation, right? So it's when this the equation was developed, it was like revolutionized, but it was the process was quite simple, and it was what we were able to do it with classical calculus back then, right? So this equation doesn't consider, for example, a lot of different costs. It just consider like ordering cost and holding cost. So it's very, very simple like equation. And we still rely on it for a lot of the things that you have done. And most of the case, even for example, this the equation cannot like account for like demand uncertainty, right? So then you add safety stock. It's like external. It's like a patch on the process, right? So because you cannot add directly on the economic order quantity, so then you add a safety stock to absorb the shocks that you have in the demand. But one decision, it's not impacted by the other. So then your safe stock, it will be independent of your economic order quantity. Okay, so then this reliance of this classical approach, it's one of the major problems here in the industry, right? So, and this classical approach fails because it doesn't consider a lot of costs. There is no uncertainty. Production, in a lot of cases, instantaneous. If it's not, they will consider lead time. But they will consider lead time in a very special situation, right? So not all real. Uh, one decision for sometimes for the entire period. It can be that your economic order quantity will change, but rarely will change during the year. Um, but then your safety stock doesn't change. And then you're seeing like that your demand is going lower and lower and lower. You still have this huge like safety stock that you have to stay with it, and you're still producing because you have to commit with the safety stock that you have, or even the economic order quantity, right? So then you see this big batch that you still have to produce, um, because the economic order quantity is still high, right? So it's not dynamic enough. You can increase and decrease your production, but this it can be in certain windows, right? So you cannot like do um, change your economic order quantity during the year, for example. Production are evaluated individually, right? So in a lot of case, you don't see the implications of having have product A with 1 million or have product B with 1 million to produce, and then you actually see that you cannot produce them together, right? So you can produce like half of that like volume, and but because the model is not considering all the products at the same time, right? So you look at the short term, a lot of case you don't have future vision of your implications, right? So unrealistic assumptions in general, no maximum constraints for no constraints for maximum stock or minimum order and so on. So constraints are very simple because of this classical approach, and for sure no seasonality at all, right? You have to handle this into the forecasting and not on the process. So then, how we see this, how we can like come up with this problem with a new mindset and use like modern tools for construct this modern approach to inventory optimization, right? What are the main goals for us here, right? So it's to reduce inventory by considering demand uncertainty, right? So on the process itself, not as a patch, but a model that can take care of the decisions, considering that the demand is a stochastic process, right? So then we're going to optimize the product monthly, right? So we're going to tell you suggestions on productions on monthly levels, right? So, and then we're going to simulate also, this is quite important, this process, that you can have this feedback loop with like strategic stakeholders, that you say, oh, I want to minimize my inventory. I have this profit function, right? So what will be the implications for that for the future? So you you actually create this like simulation capability that you can compare best strategy and go through them, right? And the way that we're going to do this is like by having like machine learning model that will do like forecasting for us, and having the mathematical optimization model that can handle uncertainty, right? So, and then we're going to have like optimal decisions that will account for real cost, every a lot of equations here from to get to the optimality, both on object function and as well as on the constraints, right? So, but we can consider a lot of things, much more than the classical approach, right? Like inventory stockouts and non-linear functions on stockouts, right? So all this can be considered on this new process. We can integrate seasonality through the machine learning model, right? So we can also integrate the uncertainty on seasonality, right? So as, for example, you see that you're going to arrive in January and this product has more uncertainty on the demand on January, I will pile up in inventory in December because I know this uncertainty will happen. Not necessarily the forecasted demand will change, but I know that I can have like between like 1 million to 10 million on demand on this product, and that's a big uncertainty there, right? So, and you're gonna uh, deal with this uncertainty through the mathematical optimization process and using machine learning model to get the the range, right? So the distributions for this uncertainty. So then we're going to be much more dynamic on decision process. If your forecast change, if your uncertainty change, you quickly change this. You can run this model every month, and we're gonna like model stockout functions in a proper way, right? So it's not only that you're gonna lose that demand, but if you're going lower and lower and the percentage of a 10-year demand, think about like 50%, the cost is much higher because it requires some marketing activities to recover that clients that you can lose by not like achieving that level of demands. We can have much more real assumptions, right? So if this incorporate different constraints, inventory levels, and the model can be much more like robust. And this also lead to like risk. You can think about like what's like my service level for multiple scenarios, my case fill rate, right? So it's on target for all the scenarios that I have for the future, right? So you can look at more on risk level for doing this strategical decision process. And now that I talk about this, right? So it's like very bold assumption, right? So why you were able to do all this, and I'll describe a little bit more why like machine learning optimization it's the perfect match here for this problem, right? So machine learning will find like the patterns on the data, right? So it will make predictions based on the, like previous observation, right? So you're looking at the past and trying to see what's going to happen in the future, right? So you need to collect data for this. You need to have a lot of data normally for this, and you need to structure this information, right? So and then optimization is the other side, right? So that you're going to make optimal decisions and you have to construct this mathematical model, right? So and but it's very good to like it's the way to define your decisions, right? So it's the way to give your productions, your volumes for each one of the products that you have here, considering all the constraints that you have on the manufacturer process, all the constraints that you can have with the supply chain, with your delivery of the products, right? So and also the uncertainty on the demands, right? So, and the objective here will be like maximize profit, right? So then you have a proper objective that everybody understand and everybody can see the implications of that. And just as examples, right? So what are the applications that we have for machine learning, right? So from sentiment analysis, predict customer propensity behaviors, right? So predict like movements of the markets, the forecasting, and so on, right? So for example, in this case, will be like forecasting, and optimization will be like to decide, right? So decide how to allocate capital, decide how to do the production, how to do the maintenance sometimes, right? So, and how to do this with like a proper optimization model. So this new approach to inventory optimization offer a lot of dimensions, right? So I described a lot of them, right? So the major one is like reduce your excess inventory. Inventory, it's money that you're not using for investing in other part. So this model will increase your profit and save you on cost because of that. And how we can do this, here I will divide the machine learning part of this and the reinforcement learning stochastic optimization model that we use. Right, so first you pick up the samples, then your demand, right? So, and you pick up like historical demand for those products and you train a machine learning model for this. And this machine learning model will not only forecast this, because if you optimize for just one specific scenario, you're always wrong. That's like the probability of that actually happen is quite small. So you have to optimize for that forecasted scenario, but also understand that you have uncertainty for that. So then, giving this observation, you not only will give it like the predictions and the forecasting, but also will give like distributions and uncertainty for those products, right? And with this uncertainty, we're gonna train like this reinforcement learning stochastic optimization model, and then we're going to use both of them to the forecasting together with like this policy that we train to simulate and make decisions for the future, okay, and see the implications of this decision, okay. So then I will show a quick demo here, right? So about a solution that we construct with like open source data, right? So just to illustrate a little bit how this process could happen, right? So here we create like a application, right? So that we have like some dummy data here, generated data for pencils, like in products, right? So that you can train this model on this data, and then it can like give you like production, right? So then everything starts with the production, right? So after you train this model, you can simulate the production, and then giving the production and your scenario demand, you'll be able to calculate how much I will be able to sold, right? So, and how much it's my sale loss, and as well as my inventory levels, right? So how it's my total cost, my ordering cost, all the cost components of this, okay? So everything starts with the decision of the production, okay? And here in this case, for example, I put like a constraint on the production that your production cannot like vary that much, right? So every month you can reduce the number of products that you're like producing from 10 units, for example, here. So then you can, if you start on 40, you can go to 30 or 50, but you cannot go, for example, to 20. So it takes some time here to ramp down this production. And that's the kind of things that we can do it with decision optimization model. So you see, for example, here to rise up all the way to 40, first you rise to 30 and then to 40. And then here we have like a simple process that how much cost per unity, ordering cost, carrying cost for all those products, the price, the the full size order, the stock out factor for our stock out function, right? So as you increase this, you're gonna have more inventory because you don't want to lose your sales, right? So, and you also have like the initial inventory, max inventory, initial production, maximum production. And then you can run this model here, train this with this data, and simulate for different lengths and different scenarios that you could have, okay? So for example, here we see this like with standard parameters, we're gonna have these KPIs here in the bottom, right? So, uh, and one of the KPIs here, you can see that your service level is like 83%, okay? And maybe the client's not happy with this result, right? So it wants to go and try to having a higher service level. So you can come here like increase the stock out factor to be able to to reduce like your sale loss, right? So then you go and train the model and simulate, right? So but takes like a couple of minutes to do that. So I prepare here a case that I run the same model, the same parameters, but with a stock out factor of 10, right? So you're going to see two major implications here, right? So you're going to see like your inventory levels. That's here you're going to see much more inventory that you had before, right? Um, so you're going to see this level of inventory. Here you're going to see that you have much more inventory for that, but you're going to see that your service level reached to 93%. So that's the trade-off that we have to talk about in strategic decisions. You want to spend more money on inventory to have like higher level of service, right? So then it's okay. It's a decision that was thinking about it, that was taught during this process. Now going back to the presentation, right? So giving this demo, right? So we understand a little bit better how this process can work in a company and how they can do this looping of strategical decisions, right? So, and here I will talk about the whole process, right? So where this journey started, it starts, right? So, and how the company can look at of this decision optimization, right? So everything starts with the data collection, right? So you have to have the historical information, right? So if it's like demand or transactions or volumes or price, right? So then you'll be able to do simulations of this to get normally together with like machine learning model, and you have scenarios for the future, and then you attach the optimization process on this. And what you see here, what you saw there, right? So during this demo is this looping, right? So that you see your KPIs, you go and like analyze the results that you have for those KPIs, and then you go back and change some parameters, some hyperparameters of this model, and then you analyze again if that's the goals and that's the result that you were expecting, right? So and you do all this process on very high strategical level, right? So you don't try to go and micromanage things, right? So and then what if simulations on the detail. If you do this production or that production, and then you have to go to a thousands of different scenarios for doing that. You actually change one parameter, go back, run the model, see the results of the simulation. So it's pretty important the human person here like doing this adjustment, because not everything's on the data. There is a lot of information that will not be on the data. So even we are doing data-driven decisions, we still have to fit the hyperparameters of this model and to a proper decision model, right? So and the human is very important on this process. Okay, and here in the bottom you can see like things that can help here at EPAM, right? So we have like several offerings that can help in the company, independent where the company is on their journey, right? So if you're dealing with problems with data structuring, right? So we have Data Factory. If you have like forecasting, you want to construct a forecasting model, then you have the idea framework and the time series offering, right? So and we also have like the decision optimization, right? So that's my part here. And as well, if you need help in order to understand what kind of model you need to build, what kind of adjustment you have to do it, we have both data analytics and consulting, business consulting practice. And last but not least, right? So we have this case here that we picked up this whole methodology, right? So for a large pharma company, right? So and we construct an initial pilot with them, right? So this solution enabled them to be much more efficient, right? So for each brand, reducing like lost in inventory, right? So it is again this very flexible in-house solution. So it has the thinking process of the company, right? So it has its own objective, its own way of doing things, right? So with its own like a way that they will structure like their profit calculations as well as the constraints that are most important for them, right? So it's pretty adjustable for that, right? So and so accommodated perfect the client requirements in the process, right? So that way they use the solution and they are more happy with the results that they have here from out of the box solution that they can have out there on the market, right? So and we use the month forecasted here, right? So with machine learning model, right? So to get those distribution, and you also like do simulations on future demand, right? So to see what will be the implications of different policies, right? So I want to have as low inventory as possible. Then you're going to see what's be the result, and probably your service level will not be as you were expecting. Then you're going to try to increase your service level, and then you're going to see your inventory levels increasing also, because to handle the demand uncertainty that you have. And this all is like part of the tool, right? So you can see this policy and doing simulations for the future and see the results there, right? So uh, we have to have like several data sources in order to do this, right? So you can imagine like cost, price, historical production, all this has to come together in order to feed this solution with enough data to make the decision process. And then what we have like estimated savings depending on what production line, how the process is, on which site, we have around like 4 to 11% increase in profits. We have much better like KPIs also, and much better data-driven decision process with much less stock out, and also a lot of less inventory, right? So we are not holding that much inventory because it means for the model it means a lot of holding cash. And one of the site here, one of our partners, that's Gorobi, it was used to solve this model, right? So it's quite important also that you have like a proper solution that can handle the level of the models that need to be solved, because here we are solving like millions of optimization problems just to train this like reinforcement learning stochastic model. But this is just the beginning, right? So we're talking about one process, one tool, but the same methodology, the same things that you saw here can be applied to several parts of this decision process, right? So you can integrate with other solutions. You can use this core technology to, for example, reduce changeovers, lead with raw materials constraints, so inventory, decide, for example, maximum capacity that you should have on the sites. So it can be applied to several other things, right? So the same like methodology that you saw here. Okay, so this is just the beginning of the journey, right? So, and now I'll stop for the Q&A. No, if there is.
Thuener, thank you for this insightful talk and the demo. And we've got a lot of questions in the chats, so let's try to address them now. The first question is inventory optimization looks like an old problem and quite popular. So what is the main difference of your solution comparing to the known approach?
So this is the classical approach, right? So that I mentioned here, right? So it's an old problem, but they keep using like old methodology for this. My approach here is to use like state-of-the-art technology to tackle this problem, right? So we are using state-of-the-art machine learning models with probabilistic forecasting, as well as state-of-the-art optimization methods that can deal with like uncertainty on the demand, right? So that's the big difference here.
So it's using cutting edge technology to make it as efficient as possible at this moment, right?
Exactly. Okay.
Okay, thank you. Next question. Um, what solutions do you see more frequently? Clients wanting a forecast of demand or time to demand models?
So what's the second part? Time to
I
demand?
repeat it.
Can you repeat the
Yeah.
question?
What solutions do you see more frequently? Clients wanting a forecast of demand or time to demand models?
Time to demand.
Forecast of
Okay.
demand versus time to demand.
Time to demand. I'm interpreting here like
So it's
and
about
how
maybe
much time.
value, uh, volume, or the time when it will happen, as I understand.
Yeah. So to be honest, it a lot of the tools that you're gonna use it here depends on your industry, right? So could be that there are industry that if you use the classical approach, because you don't have a lot of uncertainty on the demand, and there is even case that you just produce like a constant amount, it should be okay if you have something that your demand doesn't fluctuate a lot, right? So, and that's okay. Probably you don't even need in that industry like a machine learning model to forecast what's going to be your demand. But that's not the case that we normally get from our clients, right? So those are the difficult ones, that your demand fluctuates a lot and even change 1 month. Sometimes you have like the seasonality of products that you expect this product to have a lot of demand on January, and then you see some shifts on this pattern that this high demand didn't occur like on January, but actually in February. So then you have all this inventory that you prepare on January that you actually just have like the demand for it from on February. So then you store and have all this holding costs that because you miss your demand, right? So when you have a lot of uncertainty for your demand, you need to be able to use more powerful tools, right? So otherwise, the classical approach you'll be too like difficult to deal with this uncertainty, right? So you're not going to have the right inventory at the right time, for example.
Mhm. Okay, thanks. And the next one, how long can it take to develop such a model that can consider all the mentioned factors?
So this demo that we construct, right? So I would say that the most difficult part it's on data, right? So this demo that we construct, like some like dummy data, right? So just to show capabilities and do it pre-sales, right? So it was less than 1 month, right? So although we get like the right people here at Tipon, right? So then getting the people that already know like probabilistic forecasting, right? So machine learning tools, right? So as well with my background in stochastic optimization, right? So we'll be able to develop this quite quickly, right? So, but yeah, in 1 month we can develop a solution like that. The heavy lifting is on data and make sure that we have the right model for the client, and that can take a long time, right? So data quality issues can take months to deal with them, as well as having the proper function, right? So object function and the constraints from the client, right? So a model that he can rely on it and a simulation procedure that can rely on it, right? So this take a long time, right? So and then develop of like a proper front end, back end application, full blown up production level application, it's take a long time. But the prototype, it's like a matter of months.
Mhm. Okay, I see. So the team, if it's ready to start implementing it for a client with all tools ready, it should be not so long.
Yeah, we
Okay,
have.
thanks. And the next question, how to protect, validate, sorry. The next question is how to protect the final optimization decision from inherently random nature of LLM models. And is there a way to manage acceptable risk threshold within the inventory optimization problem apart from a fixed cutoff?
So it's important here on the process, right? So let me go back to that slide. So here on this case, we are not using LLMs, right? So to use this, we are using like probabilistic models, but they are not like LLMs, right? So this is time series model that's and it's more like uh, classical than it's more classical, but we're talking about like 5 years ago model, right? So LLMs, you have a lot of
Mhm.
like hallucinations and the forecasting can change, right? So it's not the case for these models that we are using here. We are interested on the prediction and also on the distribution of this. So I don't even know an LLM model that can do this for at least for now. So we are looking at probabilistic models, right? So probabilistic forecasting that you can generate like samples and scenarios for the future, right? So given that demand, right? So, but it's very important here, right? So that you have a robust process to generate those scenarios and also like a robust reinforcement learned model that if you change a little bit your distributions or predictions, your production will be similar, and that's what we have here, right? So these reinforcement learning stochastic models, they're very robust to those changes on this distribution, right? So And you have different sample techniques that you can use to sample this distribution, right? So, but if you use the right one, the change, if you change a little bit, those distributions will not change a lot the results on the production, right? But it's quite important on the whole process that we're talking about from the data, right? So that your data quality is very high standard, right? So what I mean here, you're talking about like changing some things, right? So, or having some wrong parameters of this, what will be the implication on the model? And the reality is that it could be quite sensible to that. So I can give you an example. For example, if you have a product that's the most profit one, and the and you have a lot of demand, your demand for this product is very, very high, much because your forecasting is wrong, right? So there, the model could like tell you to just produce that product because it's the most profit one. You have enough demand to be able to fulfill all your capacity on the production line. So then the model will tell you, okay, just produce this product because it's the most profit one. Your profit will increase like a lot, and then you're not going to have diversification and so on. But this is like because you have a bad forecasting, right? So this model for sure can handle like changes on this distribution prediction, but small one, right? So if you have a very bad model here on the forecasting, and that give you like very unrealistic demands for you, then it can lead to disaster results on the simulations, right? So, but that's also part of this validation process, right? So that's why the human in the looping here is quite important, because if you show the KPIs and showing that your profit can be like much higher than people were expecting, they will start questioning your simulation, and then you have to find the bug and the issues with that. So during this process, both on the forecasting and the distribution and the uncertainty, you have to have human validation on this, right? So because a lot of the case, we're going to find some like forecasting that's wrong, or you're going to find that your metric on CFRs or service level is too low, and then you're gonna dive this and investigate, and then you find like a data issues related with this. So all this is part of this robustness of the solution, right? So, and that's why it has to be quite transparent for the users and stakeholders, right? So, and that's why also they have to be part of the construction of the solution, right? So because they will tell us when the model is like going the wrong direction.
Okay, thank you. You've answered a few more questions from the list already during this answer. And one more question: how you observe and measure data drift, and how often you retrain models with new data?
So on this case here, the model will be just the machine learning model, and both we have two models to train, right? So well, the machine learning model will be trained like every month, as well as the reinforcement learning stochastic optimization, right? So every month we train this model, right? So we have monthly decisions. So for us, we don't have to do it like with real-time decisions, right? So there is a secondary process that will bring this strategical production plan and distribute this into like daily or weekly decisions, right? So here we are on high level. So then we retrain the model every time, right? So we don't need to worry about like drifting because we're gonna retrain the model every month.
Okay, thank you. And the next question: doesn't this model require so many assumptions that accuracy of the predictions becomes very questionable?
So there is several assumptions actually on the model, right? So one of the things is that the the constraints and the objective function that you have, it's actually real. For example, if for example you put like capacity limitations on the model and this is not that real for like the site, then you're going to suggest productions that the site can actually not do it. So this model is as good as the data that you have input to it, right? So and the same way for like the prediction, right? So the prediction has to be good enough so the model will give you like we will understand what like the possible fluctuations on this demand, right? So then you have to be very, very critical with like the data quality.
I see. And about data quality, how you clean from noise signals.
So here there are
Just
several
any noise in the data.
procedures, right? So to do that, right? So on this on this case here, we'll not worry that much on the noise, right? So for this time series model, because we can deal with this on the sampling of these distributions, right? So even if you have a little bit of noise during this sample of this, um, we will be able to handle that noise, right? So then we're not that worried a lot with the noise here. So we didn't did any special treatment here on this like sampling procedures to deal with the noise.
Okay, thank you. And probably last short question. Uh, so this approach is very similar to what we have in clouds for resource consumption optimization. Can it be applied for cloud services too?
So yeah, this same approach can be applied to several industry actually, right? So this core methodology, anything that you have like uncertainty together with a decision process, right? So you can think about energy generations, cloud resource, even like market asset allocation, right? So where you have this a lot of uncertainty on the demand, and you have to decide which kind of like distribution you're gonna do from your budget, right? So each one of the assets that you have, right? So the same procedure and can be applied to several different like applications, right? So and even like on company levels, right? So how you decide your allocations of resource on the company level, given that you have uncertainty on a lot of things on company levels, right? So to optimize your whole process. And so there is like several industry that can use this, right? So I have like a good example of this that's like the same area that I did my PhD, right? So that I have a friend that even apply for farms, right? So for milk production, right? So he construct this framework that he used like for optimize like milk production because they have a lot of uncertainty also, right? So on the demand of the milk, right? So and there is even options that you can do it and do and buy like some structured like options, right? So that you can lower your risk by using that model, right? So the application is vast, right? So anytime that you look at and see like demand uncertainty, you can use the same structure that you have here. And one
Great.
more
So this
important thing
approach
here,
is
it's that it's
yes.
not only demand uncertainty, you can have uncertainty on several different variables here, right? So for example, one of the things that you can consider here also, right? So it's that you have uncertainty also in your capacity, you have uncertainty on lead time. So all this could be considered in this model. You have to be mindful that as you have more and more uncertainty, this model here, the enforcement learning, is going to take a long time to train, right? So we tend to not put a lot of uncertainty there because it's going to be difficult to train this model, right? So it's going to take a lot of hours to do it, but in theory you can do it. You can add more like a source of uncertainties.
Thank you. Thank you, Thuener, and thank you all who joined this session today, and thank you all who asked questions. And don't forget to say speaker thank you by awarding a badge and rating the talk. And be sure to subscribe to our channels to get more content like this. And we hope to see you all at the next sessions on Winter Data Meetup. Thank you all. Thanks, Thuener.
Thank you very much.
Bye.